I'm Amy Anderson and you're watching OptionRally TV. Click the link to my right and get more information on OptionRally. So here's what's happening today, October 29th, 2013 in the market. Anticipation of the Fed meeting brings out the shine. Oil comes down from a week-long high. And lastly, the U.S. releasing the Conference Board Consumer Confidence. Your profits are starting now. Gold futures traded slightly higher as traders await the start of a two-day Federal Reserve meeting later today. Federal Reserve officials have said in the past they will pay close attention to data before deciding on the fate of stimulus measures. That means the softer U.S. data is, the longer the Fed will resist tapering its $85 billion per month in bond purchases. While the most recent U.S. data points have not been that bad, they have been soft enough to convince traders the Fed will make no tapering announcements when it concludes its meeting Wednesday. Several central banks around the world have enlarged their gold reserve holdings. What does that mean for the price of gold? Gold closed yesterday at $1352.90 and has climbed to $1354.40, continuing this morning. For OREC trading today, it is recommended to consider a call option when the price hits $1358.20 and to consider a put option when the price hits $1346.40. Crude oil futures rose to one-week highs yesterday after crude exports from Libya dropped, while U.S. data showing that industrial production rose at the fastest pace in 7 months in September boosted the demand outlook. Oil was strengthened after Reuters reported that exports from Libya dropped to approximately 250,000 barrels per day over the weekend from an overall capacity of 1.25 million barrels per day due to labor protests at major oil fields and ports. Crude futures received an additional boost after data released on Monday showed that the U.S. industrial production rose by 0.6% last month, above expectations for a 0.4% rise. Oil traders have closely been looking out for U.S. data reports recently to gauge if they will strengthen or weaken the case for the Federal Reserve to reduce its bond purchasing program. Will the Fed decide at their meeting this week about the future of the program? Oil closed at 98.75 yesterday, but then settled on to 98.32 continuing this morning. For crude trading today, it is recommended to consider a call option when the price hits 98.72 and to consider a put option when the price hits 96.52. Today in the market, the U.S. is releasing the Conference Board Consumer Confidence. This measures the level of consumer confidence in economic activity. It is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. Higher readings point to higher consumer optimism. A higher than expecting reading should be taken as positive for the USD, while a lower than expecting reading should be taken as negative for the US dollar. The forecast is for it to be 75. Tune in today at 3 GMT and get ready to trade the greenback. I'm Amy Anderson. Follow me Monday through Friday right here on my channel at OptionRally.com and on my Facebook page. See you tomorrow.